Hello, everyone. Welcome to the live stream. Lots of chat already, and wonderful to see you all. We're a little bit early, starting in a few minutes' time, but welcome to Ray Tunate. I think that's a Turkish name, asking about copper. Tanil, well done for making it. Well done to you. Nice to see you too. Zed Pepe. Talk to me about lithium. And Tanil, natural gas. You want to know about NG. Daniel, hello to you. Daniel has just won a $25,000 trading account, a Forex account at Ola Prime TV. Well done, Daniel. Fantastic. Emily Trading, lovely to see you too. This session is about to get lit, says Emily. I think we need to start today's session with a shout out to Tanil. What is it about Tanil? What's going on, Tanil? Tell us about it. Good day, Doc. ID Doc. Good day, friend. I hope that's a person. Not sure. Anyway, folks, welcome to the live stream. There's a lot going on, and I'm going to probably try and get into things fairly quickly. So I'm watching Bitcoin and various cryptos today, including other things like gold, silver, and some of the copper, and some of the stock names, and a little bit on Forex, and some of the softs and grains. So we'll get into all of that as we go along. So welcome to you all. I appreciate you being here so much, and thank you for being here. You could make my life even happier if you press the like and subscribe buttons right now as I'm talking, just below this video. There's a like button, it's like a thumbs up, looks like that. Click that button, and there's a button that says subscribe, and if you click that button, you may be instead stand to win a prize later on. I'll tell you about it in coming sessions, so make sure you don't miss the next sessions. We may be giving away something worth quite a lot of money to regular subscribers and viewers. So all you've got to do right now, make sure you like this video and press the subscribe button to make sure that you don't miss future videos and to make sure that you're in the draw for whatever's coming next. So I'll tell you about it in another session. So that's to come at another point. So good day, Doc. Jamie Bridges, nice to see you. Wonderful to see you. Roby, you too. Lovely to see you. Good morning. And good morning, everyone from Roby. Thank you for the live stream, James. My pleasure. Gigawatt. I love that. It's literally, your name is Gigawatt. I love it. Hi, James. Missed the Ola stream today. Well, you can always catch that up. And you also missed out on the chance to win a $25,000 account, which Daniel won today. So well done, Daniel. I'm sure you might tell us about it. And good day to you, Sarvesh, a new member who's joined up here as a supporter. Thank you so much, Sarvesh. I really appreciate your support. It's not unnoticed, and it's not unappreciated. Marcin, nice to see you too, mate. You want to talk about Swissy against the yen? We can cover that. If you remind me at the end. If I forget, Marcin, please remind me. I'll try and cover that. Cryptow 3B, nice to see you. There's another winner of the $25,000 trading account at Ola Prime, Cryptow. So 3 of them in this current chat have all won $25,000 accounts over at Ola Prime. My new gig, I'm doing a little consulting there for them at Ola Prime TV. You can catch me there every morning, 8:30 a.m. Eastern Time, Ola Prime TV. That's H-O-L-A Prime TV. 8:30 until 9:30 a.m. Eastern Time every day. And they're giving away winning funded trading accounts every day too. So if you go over there, you can catch me in the mornings. And Crypto is one of the winners, and so is Emily Trading. And Daniel, who was here earlier in the chat. Japan side, nice to see you. Hi, James. Can you show us which volume indicator you're using on the right-hand side of the charts? I'll show you, sure. Let's do that right now. I may as well start straight away, even though we're a little early. So this volume indicator on this chart, if you've got TradingView charts, let me just show you. I'll use the Bitcoin chart to let you know. And the question is about this indicator on the right-hand side of the chart, this over here. And it's an indicator provided by TradingView. And I'm going to double-click on it to show you what the indicator is. And you can see it there, VRVP. And this is on TradingView. It may be that you have to have the paid TradingView facility to get this indicator. I'm not sure. But that's it there, VRVP. And what it does, it gives you this volume profile on the side here, aligned to price levels rather than time periods along the bottom. And so we can see where the price spent most, the price spent most of its time in terms of price and not in terms of time. And that gives you this illustration on the right. So when you see these big slopes here, a couple of things you can tell from this. First of all, where the highly traded zones are, and those are areas where you're most likely to get resistance or support. But secondly, you can also have a look at the differential. Excuse me while I drink some Red Bull. I've just come out of another live stream, so please give me a little bit of leeway to be a little casual and pour myself a Red Bull, even though it's a blue can. This is my new camera. I hope you enjoy the view. It's one of these new cameras that focus super fast. I rather like it. So on this volume profile, there are a couple of things. As I said, you can determine where the market is likely to form support or resistance in this most traded zone. There's one here and there's one further down. But also, excuse me, you can watch the charts as they're ticking. And a good idea for this is to go down to the short-term charts. I'll give you an example on Bitcoin a few days ago. And these indicators will automatically adjust to your short-term charts as you change your charts. As you can see, they just pop up automatically after recalculating. I want to show you something super interesting down at the bottom here at this region where we formed the bottom after the NFP sell-off. So let's have a look at the sort of volume profile. And what I wanted to illustrate is this sort of double bottom, double top. It's not really it's on the side, obviously, but it's a volume profile with a double top. Those are always great. You always like to look for those. They create stronger support and resistance levels, big liquidity gap in the middle. But notice as well, you can watch how the red bars, these are the selling volume bars, compared to the green bars, the buying volume bars. In this instance, you can see we had a dramatic increase in selling on Bitcoin, but the red bars increased in steepness and frequency, but the green bars did not. We moved up to a certain level and then actually started dropping off as the red bars increased. So there was increased selling pressure at these levels. The same thing happened here. Look how we escalated the selling, but the buying volume remained constant. Same over here too. And so we saw all this huge selling pressure coming in to try and drive Bitcoin down below this level, which was the previous breakout level of the all-time high. Just back down, let me show you. It's a really, really nice chart. So there's the previous all-time high, the green line, and we just touched it at the 50-period moving average on the day chart at the bottom of this long-term channel. Just going to quickly change the line color here. So at the bottom of this channel, absolutely perfect technically. We added some more there, of course. It's also a Fibonacci level. It's the previous all-time high, and it's where we bounced, forming a reversing, piercing pattern candle. It's a very bullish reversal candle. So going back to the 15-minute chart, in order to perform that maneuver that we've just looked at from the bottom, we had to overcome that additional and fervent, relentless selling pressure that was occurring at all of these levels, even up here at this top level. And so we saw increase in selling, stable buying, but the selling could not overcome the buying and the market bounced. Easy trade, really. Double bottom off the previous all-time high. If you weren't watching this, and I don't blame you because it was sort of 1 o'clock in the morning, my time, I was watching it. It's what I do during Bitcoin season is I watch charts over the weekends. And so I managed to get long again at that double dip. So that's Bitcoin and just answering that question that came up in the chat. But I'm going to go through some of the other things. Quickly just finish off with a chat here. Good morning, everyone. Lovely to see you. It's Tuesday morning. It's an exciting week, and I believe it's the week when we're going to see these markets move much, much higher. If I'm wrong, I'll be wrong. I have plans in place to be wrong. Always have a plan to be wrong. You should plan to be right as well, of course. But if I'm wrong, I'm wrong, and we'll adjust, of course. But I do believe, and I think that we're moving into quite a sharp rally across various markets, and probably a commensurate decline in the dollar at the same time, another 5% perhaps. Good day, Fatima. Nice to see you. Kogi, haven't seen you for a while. Lovely to see you. Rohan Joel Lakapal, morning. Lovely to see you always. And Roby. Emily Trading Tanil, I think I've greeted everyone else. And Larry Johnston. Is this indicator available on TDS? I have no idea, Larry. I don't use TDS myself, but probably, yeah, I would imagine so. There's no reason why not. Right, let's go through the charts, and I'm going to start with currencies. I don't want to take too long. I'm going to spend maybe 5 or 10 minutes rushing through this with a monologue, but I'd like to get to your questions at the end. My overall idea on the dollar is continued weakness. And just to remind you of this overall pattern, we've got a big megaphone. This is a day chart on the dollar going back a couple of years now, 4 years. So it's a long-term chart. Big megaphone pattern. We've retested the top, well, 3 times. The third touch of the top failed, and we haven't had the third touch of the bottom yet. I think we will, and we're going to move down. We did break down through Dixie Moab, the strong multi-year support level, which sparked this move down further. Everyone's saying that the dollar is over. It's collapsed. It's finished. Incredibly weak. But really, that's absolute nonsense. As you can see, don't believe everything you read. This is the dollar weekly chart. As you can see, we're slightly down, but not an awful lot, basically, right in the middle of the overall range, and this is going back 30 years. So if people are telling you that the dollar's doomed and it's over and the end of the United States is nigh because the dollar's goners, I don't think so. But I do think we could get another 3 to 5% further down, just down to the bottom of that megaphone. And shown on the weekly chart, you can see it's even neater. There's the Dixie Moab. Moab meaning mother of all breaks, not mother of all bombs. So somewhere down here, there is an order block just below here in the 93 region. I think that's a fair target. Let's move that down a little bit and move that question mark across and move this down a little bit. So I think that's a fair target into, whoops. There's a problem with these. I don't have a mouse. I'm just using the mouse pad, which is always a problem. So something like that, and that would be another 5% down from where we are. We're currently trading at 98. That's down at 93, so 5%. It's also the 78.6% Fibonacci level, I do believe, although I'm probably wrong on that one. Just having a second glance at it, maybe not. Yeah, so there's the 78.6 at the lower 200-period Bollinger Band. So all sorts of reasons for the market to move down here. Lower 200, 78.6, the megaphone pattern bottom, this order block, the fact we've broken down through Dixie Moab, the fact that we're still really holding down below there, and we rejected off the Dixie Moab, and we rejected the 20-week moving average. In other words, the 200, roughly, 180-day moving average. We can go to the day chart. You can see where that is as well. It's just above us over there. So, yeah, down on the dollar. And I think what that means is up on the euro. We don't have a trade on the euro yet, but we do have a trade on the pound. These are 3 small tranches, which are still out of the money. Actually, I think we've only got 2 tranches on here now, these 2 lower ones, but we're still out of the money, looking for this to bounce up. And whatever we look at on the pound, the euro, the CAD, the Aussie dollar, the Japanese yen, all of the majors are in the light of what I just said about the dollar index. So I think that the euro will move up, the pound will move up, the yen will move up. And when the yen moves up, the dollar yen will move down. And I'm looking to get back into this. I did say yesterday that we have a short position on this. That was inaccurate. I apologize for that. We do not have a position on this. We were short. We got stopped out on this rally. I just remembered. We had our position near the 200-period moving average. That's this line up here, the purple line. And we got stopped out on the push up through there. So we should be getting short again now. We're below the 20-period moving average, below the 200. I'm looking for a little bit of a rally up on this. In fact, I've got a path drawn in here already. So let's see if we can get something like this sort of path. And for eventual breakdown through that channel, down to this big flat bottom crown neckline, I suppose. It's no longer really a head and shoulders, although you might see that in there. More of a crowning pattern. That's the crown neckline. And the target is down to this sort of level here, 127. And I think we could get down to 120. Big liquidity gap below there and a big liquidity gap below here. But this one in particular is open space. If we did break down below 127, I think we'll get down to 120 in super short time, falling through that big liquidity gap. So, yeah, short on the dollar, long on everything else in terms of currencies. We took profit. We had a big profit on this yesterday, actually this morning. Well, it could be yesterday, depending on your time zone. But we got long on the dollar, short on the pound, yen. And I didn't put my arrow on here either. Been using black charts over at Ola Prime. So this is the pound yen. We got short at the top Bollinger Band, as you know, and we broke down through these moving averages into the order block. I thought we might continue. There's 100 and the 200-period moving averages just below us and the order block bottom. And unfortunately, yesterday, we formed this inverse hammer reversal candle. And so there was a chance, and there still is really, I mean, it probably will move down but we may have to bounce up a little bit more. In any event, I got out of this trade on the bounce today, about halfway up through today's candle. So that was about 300 or 400 pips, 380 pips, I think, that was banked and traded today. We don't have a position on that anymore, but we do have a position on the euro yen, and this is still moving down. Hasn't done quite as well as the dollar yen. We also have a hedge position from way down here, and it's fully hedged, so it's not really of any consequence. But just to be completely clear with you, 2 short positions there. I hedged them both on the breakout, and we sold again over here quite recently, a couple of days ago. So we're below the 20-period moving average and below the top Bollinger Band now on this euro-yen trade. It is moving down, but we didn't have that inverse hammer candle like we did on the pound-yen, and so I've remained short on this. And also we have very little profit, and I've also got to get rid of that hedge lower down. This is not a big position. Might be about like a 0.2% loss at the moment, maybe 0.3. But if I do manage, if the price does, so this is a dilemma I've got. Holding these trades costs money every night. And I think we'll get back down here. We'll be able to unhedge this and eliminate that very small loss. But, it could take weeks or months. And every day these things cost money holding them overnight. So I might just unhedge that. But that's not my main deal right now. It's an annoyance more than a major cost. But it's this trade here that I want to keep, obviously want this to get going. Now, I think we could move down quite significantly, similar to what I've showed you many times before, although the target might not be quite as easy to define now, but it was. Let's zoom in. Quite difficult, this actually. Let's try and drag this down. So the original target was something like this, assuming that this was a flag, move down, bear flag, and the next move down to 144-ish. But that didn't actually happen. We held the trend line and the moving averages. And so I think the best we can hope for now is probably a move back down to the range bottom, something like that, back down to the bottom of that order block, and the 200-period moving average, not moving average, Bollinger Band. So we're currently trading at 176. The low here is at 155. So also 2,000 pips, very similar to what we were talking about on the dollar against the majors. And that's currencies, folks. And then on stocks, well, here we go. Now, we had a fantastic couple of days, a little bit lucky, as I said in the Ola Prime stream, but literally on both the NASDAQ and the S&P, we got short at the top. I exited both of them on the this is the NASDAQ, but the S&P was exactly the same, although inversely hedged. But let's not confuse things. Essentially identical trades. Short at the top, we took profit at the bottom, and then got long straight away. And I posted this up on X. Obviously, my private group knows about it. We got long straight away, and we got out this morning, a couple of hours ago, and we took that profit as well. So short there, profit at the bottom, long at the bottom, profit at the top. Pretty nifty, right? Well, I'd like to blame that on skill and extreme trading ability, and of course that does play a fairly significant role, but it was quite lucky. In fact, on this page, you can see the positions that I've got on. I don't know why those are in there. Those are actually from my, this is a trading view chart with which I can trade off. So this account has live trades on chart, and those are the 2 positions. So you can actually see them there, and they're not showing on the other one. So we got short at the top, and we got long at the bottom, and we took profit on both of them up today. I don't know why that one's not showing, but in fact, none of them should be showing. But there you can see basically that was the trade. So we have no positions on these right now, and I'm looking to get long though, and I think we could get a decent dip. Now, a very easy way to determine where to get in, a super simple way, if you don't know how to do it any other way, and or you're inexperienced or whatever, is take yesterday's candle, the big candle from yesterday, the very top and the very bottom, and just put a Fibonacci level from the bottom, just the candle from yesterday, that's all, from the bottom to the top. You can see we've got a shaven head candle, which is incredibly bullish. So just based on yesterday's candle, we expect this market to carry on moving up. But we're probably going to need a retrace, although we're quite well into the market already. We've been this market's been open for 40 minutes already, and we haven't retraced. By now, I would have expected that to happen, which means we may not get any retracement. We could keep on moving up. But the retracement levels, let me make this darker. All right, so these are the Fibonacci retracement levels, and there's the 38% level, and that's at 23,000, almost 23,020, almost 23 round. And then the 50% level, this is the most important one. Let me give you the exact number on that, is at 22,970. Is that 50%? 22,970. So just below 23,000, in other words, into, I'd go for 22,980, something like that. I like the 80s and the 20s. But let's put it on that Fibonacci level just to show you where that level is. And I'm having problems with colors again. Let's make this thicker. And let's make it red. There we go. Okay, so that's the 50%, that is the 50% retracement, the red line, of the entire candle which closed yesterday. So that's the 50% retracement, and the level is at 22,967. I would go for 22,980, something like that. But certainly the 23,000 level, a retest of that level, slightly above, slightly below, good place to re-enter this for a long. That's what I'll be looking at. And same on the S&P. I'm not going to do those details for you right now, but you can do the same thing here. Take yesterday's candle, almost a perfect shaven head candle, shaven head top, tiny little wick at the bottom, and halfway down, somewhere around about 6285, 6290, something like that. We're currently trading at 6322. So once again, like the NASDAQ, back down to 23,000 round, and here on the S&P, back down to 6,300 round. I'm talking too fast, and I'm not lubricated enough. So there we go, 6,300 round on the NASDAQ, give or take 10 or 20 points on the S&P, and 23,000 round on the NASDAQ, give or take 20 points. Those are for long entry positions today for a move up to the next level. Another 2, 3, 4, 5% up on the NASDAQ and the S&P before the next decision point. But we'll wait until we get there in the next updates before we talk about that. We've got some time to go. It's not going to be today, obviously. I have no positions on the German 30, looking to get long on this one as well, I think, if these markets keep moving up. We're being held down by the 50, the 20-period moving averages, and loads of volume just above us. Big volume zone in this top area here, very top heavy, which means maybe it's too top heavy and we've got to fall down into some of these thinner trading zones. We'll keep an eye on this one. If we push up and close above the 50 and the 20 here on the day chart, I'll consider going long again for a break up to new all-time highs, and then probably there's a channel on here which you can't see, but there's a channel top up here, and there's a top 200 period Bollinger Band at 26,400. We're currently trading at 23,900. So loads of upside for the German 30 if we get going. But a lot of it, I think, will just depend on the overall market sentiment across the world, across the US mainly, and whether we're going to get rate cuts next time in September, whether Trump is going to fire Powell. He's already fired one person from the Bureau of Statistics, whatever that department's called. So all sorts of things. CME Fed tool indicates that we're probably going to get a rate cut in September. These markets may be pricing that in already. That means by the time we get to the next rates meeting, FOMC in September, much of it could be priced in. And if we do get a rate cut at that point, maybe that will have been so anticipated that the market will actually drop and not rally. So be very careful of all these nuances, but I do want to still get long on the NASDAQ and the S&P at the levels that I talked about. Maybe the German 30, not as excited about that. And I also have long positions, new fresh positions on MSTR, long, at that level there. You can rewind and have a look. Some traffic to get through here. And the 50, there's a little gap above us, the 50-period moving average, and the 20. But if Bitcoin gets a wiggle on, MSTR should do okay. I'm not saying it's going to be the best player of them all. Maybe it needs a lot more consolidation. We're also long on Tesla again. I'm a Tesla bull, as you know, and we got long, and at the perfect level, really. That's the 100-day moving average. We got long on the dip down to their previous support. And the island reversal that we bought last time. If you remember, we got long here, and we got out at the top. We've just got long again at more or less the same price, back into the same trade. I also went long on Coinbase yesterday. The Picks and Shovels company that deals with the digital gold. There are many. Coinbase is not the only one. It's one of the biggest, if not the biggest. They've got a great new product offering, which is just called Base, B-A-S-E. Go and check that out online. And it's what they call the Amazon of crypto. It's quite a broad claim, and whether it's true or not, I don't know, but it's certainly being spoken about, and I've got my own Base account already, which means that it's probably slightly interesting, if nothing else. So I've gone long on Coinbase at the green arrow, 310-ish. We're trading at 305 now. So down a bit. We'll see how we go. We really do need crypto to get a wiggle on, including the altcoins, for many of these names to get going. We're also short on NVIDIA, but now hedged. Not quite sure what to do with this one. Let me put the hedge position in. Over here. Oh, it is in there. Hang on. It's right over there. That's the hedge position. There's no green up arrow. So that's meant to be an up arrow, but it's meant to be orange, not green. It's been a long day, folks, and a long weekend. I worked and traded throughout the weekend, and many late nights trying to take advantage of this crypto rally. And we've been doing really well so far. I just want to get this. So annoying. Doesn't matter. I want to get this to the front. Come on. All right. So this is NVIDIA. Just for those of you who are trading and watching, we got short over there and then hedged a few days later over there at the top Bollinger Band. We pushed up through that level, collapsed back down to the 20, bounced back up again, back to our hedge level, and we've done nothing since then. So once again, depending on the markets, NVIDIA may follow suit and move up. Looking a little tired, all of them, I have to admit, but sometimes when the market looks its most tired, it surprises people the most and takes off without warning. Right, now on energies, natural gas. I don't think this is terribly complicated, and don't make it complicated. We got long at $3, just above. Actually, sorry, I'm incorrect. Our last tranche was right down here at $2.91, and we're basically long at, we got long just above $3. I'm not exactly sure what our precise average price is, depending on the sizing of each one of these tranches. Our last, excuse me, our last entry was right at the bottom here. And you know about this because I published this up on X, and everyone knows about it. So there we go. Not a very big bounce. I'm going to explain the broader picture shortly. Let's have a look at what's going on right now. We got long there, and we failed. We tried. This is the 4-hour chart. I'll go to the shorter term charts to show you the reason. We tried to get up there. We failed, and we got long at this level down here at about $2.90. Let's go to the day chart. I'll show you what I'm thinking overall. I've still got these two paths. I have not changed. We've got this channel that we're trading within. We've got the $3 or $2.90 now, which is just the bottom of this range. It's a slightly angled downwards range, as you can see, compared to the order block above it. You can see it's not horizontal. It's skewed downwards, and it follows the path of the bottom of these moves, touching precisely that low, and that low, and the third touch is where we got long. My idea is that we'll move back up to the channel top into this heavily traded zone and this order block closer to $4, and then decide what to do next. Either push on up through there to 440, where we got recently, 450, 460, or sort of falter around this order block level and the previous high. If we don't hold this level here right now at the 290 level, $3, 290, I fear that natural gas has a long way down to go. Look what happens just below where we're currently trading. Look at this big hole that we're likely to fall into. So any slip down through here will make us fall into that hole, and that means we've got to get right down through the hole, down to the bottom of the hole, down to the most traded zone below that, and these swing lows, and that's all the way down at about $2.20. So no one ever thought or expected that my prediction would come true, that we would be considering, even thinking about, a sub $2.50 price on natural gas. I warned about this. We spoke about it many times. We first of all had a head and shoulders. We then had a bear flag. Now we've got a broad flag. Now we've got this broad flag with this volume gap below us, which is very vulnerable. Possibly might want to be tested. And that could take us all the way down to $2.22. Now, $2.22 is also the target projection of various other patterns that I've got drawn on these charts. So, where does that leave us? Let's go to the 4-hour chart. We're long. Average price, let's call it $3. I think it's $3.02 or just below, just above, but let's call it $3. I'd rather be precise, but I don't know the exact number. And so we're not even in profit right now. We're 3 cents out of the money, and we need this to push up through all of these moving averages, this order block, and look at the volume profile. The reason I'm using the volume profile, a lot of people are asking me about it, I see in the chat as well, is because TradingView, this indicator is fairly new, and not only is it new, the VRVP, but it's also just been sort of upgraded a little bit. It's easier to use, looks better, and it's much more malleable in terms of customizing it. So, and what it does show you is these zones. Now look above us. We've got lots of traffic to get through. We've got this double top volume profile right at around these levels, and it's going to be tough. But just one good push up through there should get us moving, and a close above this ledge, this literal ledge, at about $3.20 should see us with plenty of space. And you can see then the volume profile, a little bit of resistance here at the 100-period moving average, but then we drop off quite a lot. Then there's a bit of free rolling to go through until we get up to this level at 360, and then into the 375 level, always the key level on natural gas over here, up into this region here. As you can see, always the most heavily traded zone on the longer term chart. So we're long on natural gas. Target, basically the top of the channel. Let's go back to the day chart, just to remind you. Really not that complicated. A drop through here, a close below that level on a daily basis or a 4-hour basis will get me. We don't have a big position on this either, by the way. We've only got probably half of what I want. So I'll probably just immediately hedge that and maybe even consider shorting it for a move down to $2.50 and then $2. But I think we've got a good chance of holding here. My overall idea that natural gas will be trading within a higher range for the rest of this year still remains until proven otherwise. And right now we're at the crux point, the key inflection point, and we'll find out today or tomorrow whether we're going to hold this level. And if we do, we should go up to 4. If we don't, probably down to 250, 220. That's natural gas. And then on WTI oil, just to finish this off, just moving down, 100-period moving average support here at just below $65. We're down 64, 65 now, so moving lower today. The 100-period moving average support here, we haven't quite touched it yet, but look what happens when we get down below this level. If we do manage to break down below the 100-period moving average, we've got a massive hole to fall through, and that will take us all the way down to the next order block at $62 to $60 into this green zone here. Look at that big hole there. If we fall through here, it's going to be a pretty quick move down to 62, 61, 63, and then eventually back down to 55, and then eventually, even more eventually than that, further down. So I think we'll move down within this channel and get to the channel bottom at some point soon, and that should take us down to, if we follow the right angle, by about October, we could be at $40 on WTI oil. You heard it here first, and you may have heard it here last if I'm completely wrong. But if I'm right, you'll hear it again. Don't worry about that. So that's WTI oil, and then Brent crude, the same. We're still long on UEC, no trades on URA. I had a look at this UEC chart this morning, and I noticed something really interesting, is that we haven't had a black candle, barring those two and that little one there, for all of these days. 1, 2, 3, I'm not going to count them all, maybe 20 days. Out of all of those days, we've had only 3 black candles, and they're not even really that black, are they? They're just sort of nothing candles. So that's energies. And then quickly on, okay, let's go through top left. We're still long on the South African rand, not the rand, the dollar against the rand. South Africa has 30% tariffs slapped on it right now, and those could increase because of the tiff between the US and the South African government. Political tiff, nothing to do with money really, just politics. The US doesn't really care how much they do or don't trade with South Africa. It makes no difference to them. But South Africa certainly cares, and we're in dire trouble right now because of our shenanigans. I still don't know why the rand is not collapsed completely. We should be at 20, we should be at 22, 24, 25, but we're still languishing down at 17, 18. Don't know why. Who knows? US 10-year yield has moved down, and we're about to, or trying to, break down through the support level. We've got one little support here that we're testing right now, and then another more significant level at 4.14. In sympathy with that, TLT has moved up. We're long on TLT. There's our last tranche down at 85, call it. We're trading at 88 now. So it's moved 3% in about 2 weeks. Not very exciting. But we do have two falling wedges here, and I do think eventually we'll break up. We'll get the 200 period moving average, the purple line, just above us. But we have cleared the 20, the 50, and the 100 period moving averages. There's the 200, and there's the falling wedge top. And if we can get through there, we could see a sharp short squeeze on TLT on treasuries, something like that, something like this, and off we go. My target is 100, and that takes us all the way up to this zone here. Where is 100? Up there, something like that, at this previous high, okay? And then maybe a bit of a drop down and something like that. I don't know after that. And then probably, actually, once we get to break even, I think about 88, I'd probably be tempted to get out of this one at break even. I've threatened to do that about 15 times so far since the beginning of the year. We still have not got out of this trade. It's costing us overnights. I'm now determined to get my pound of flesh out of that trade. Going to softs and grains, sugar are holding up pretty well despite the misery that it has caused a few people, I believe, but holding okay. Big sharp spike down through there, just down to that order block and bottom of the channel, really. And generally, I think these prices will pick up. Of course, we've just had big crops generally across on softs and grains all over the show, keeping prices quite low, including wheat, soya, corn, sugar, all that sort of stuff, and even cocoa and coffee coming off. So commodity prices, super cycle, not happening, not yet anyway. And we'll have to wait and see how these go. But we are long on sugar, short on cocoa, and these trades have kind of run their path almost. We've been short for a long time on cocoa now. Looking for this path to move down. We've been shorting cocoa since these highs for a long time now, over a year, I suppose. But it's getting boring now, and we've still got one small tranche on from there. Generally, this is the path. I think we could maybe retest the top of the channel. Maybe we'll have to do that. I don't know. This is the path I think we'll follow, but it is getting boring. And I've been in this trade for about a year now, overall, in and out, hedging, unhedging, taking profit, reselling, rebuying, rehedging, in and out, hustling cocoa, making some coin off it, but it's getting a bit boring now. Same thing with coffee, really. We've been short a lot on coffee, hedged a few times, as you can see from the orange arrows. We're short again, sort of close to the channel center line. We didn't quite get there, but I shorted it anyway, close to that original hedge. And I took some of that hedge off as well. So there we go, breaking down through that channel. I suppose a decent channel, fairly reasonable channel. The top's been pretty neat, and we've now broken down through the bottom. That channel bottom has now been disrupted and broken, even though we've bounced back inside. It's a retest. I'm hoping that we'll turn around right here at 300, just under the channel bottom. Next move should take us much lower on coffee, down probably into about 150 to 200. We're currently trading at 300, so a decent move down on there, perhaps. We'll see how we go. The danger, of course, is just getting bored on this one too. Orange juice we're now out of, by the way, in case you want to know about this. Not many people trade this, but it has been a good one on occasion. We got short there. We suffered a little bit of drawdown, and then we got this massive sell-off, huge gap over here. And I just got out yesterday at the bottom. I think we're probably going to have to refill that gap, particularly considering that this gap has a gap right next to it on the left-hand side, which has not been filled. So we got a double gap there. We've also got a double gap over here at the top. So too many gaps, too many double gaps, and I think we may have to retest them. Failing that, though, orange juice could keep on going down quite rapidly. But I don't think it's really worth holding it for much longer. We've come down a lot. We're back into the middle of the overall sort of range, and maybe not. So I'm glad we're out of that one. We took a really good profit. In fact, it's one of our best trades, one of our better trades this last 4 weeks or so, considering, well, we got short at the top. That was our best trade in orange juice, was obviously the top sell, and that was our second sell on this sort of move down, and quite a good move, really. We got short at 300, I think it was 315. Let's call it 320. And we got out at 235, I think it was. So really good trade on that one. And that was orange juice. And then cotton, we're long on, sort of all these are just languishing sideways, very, very sideways on cotton, but not downwards at least. And then on corn, down, but not sideways, which is not good. But we still got this order block that we're in, really pretty much nothing. We don't have massive positions on these, but they are annoying nevertheless. And then wheat, same sort of thing. We've got another falling wedge here, and I put there super nothing. We were talking about the super cycle in the last live stream, and I was tempted to write super nothing, which I did. So wheat just languishing down, but still not down below the falling wedge bottom. In fact, there are two potential bottoms, this one that we're at right now, more or less, and there's one that's slightly lower down here. So, yeah, that's wheat, languishing along with the rest. And then someone asked about lithium, and Emily Trading, and I think it was Daniel, was it? I can't remember, asked about, or was it Tanil? Asked about lithium. And lithium, we're now long on lithium. We are now lit. This is the ETF, LIT, you can trade it. Depending on your broker, some brokers may not allow you to trade this or they don't offer this, but we got long down here at $40.60, whatever it was, 55 or 60, somewhere around there. We're trading at 41.97 now, so a couple of dollars up. My path for this one, and I'm allowing for a retest of this low down here, but just keep that in mind. In fact, even further down than that, because we have a channel that we broke out of, so I'm allowing for a move down as low as 36, right? That's a long way below us. That could happen. But as it turns out, we've bounced rather than continuing down. We've moved up quite nicely. Let's have a look. So we're there at the moment. And so instead of following the green path, hopefully we're following the gray path. Targets for this one, I have no clue, but I'm going to have to use these fib extensions and so on. And I haven't really done these properly, so please don't pay a lot of attention to them. But certainly up into some of these higher levels. And I think I've just drawn them up into these previous highs. There's one, there's one, there's one, there's one. You can look to the left and determine those levels for yourself. But something like that, really, over time, a very big rally on lithium. The metal, which we all love these days, that comes out of the ground in Kazakhstan, many African countries. It's not nice, it's not good for people to mine lithium, but we love it because it goes into every single battery-powered thing that we have. Every single thing. Lithium is in it. Anything with power that doesn't have a direct power source. All right, folks, and that's that. And I think I've covered basically everything. What I'm going to do is to go back to the questions and see what we've got here and circle back. And then if there are no other questions, we can get on with our trading and make some money. So let me just see what's been going on here. Good day, Jerry from Texas. Nice to see you. The Jazz, Tages. Nice to see you. Jerry, as I said. Marco, what's the target for ETH and Solana? Yeah, we got long on Solana, by the way. Thanks for bringing that up, Marco. Target for ETH and Solana. I forgot to mention Solana because we got long and I actually removed the chart. So let's have a look at ETH. Target for ETH, really, I think the best I'm going for right now is a break through the top of this huge triangle, back up to the original starting point of this triangle at 4,800. But if this is to break out and significantly, and it is going to be a huge breakout rally, then we've got to go back to the technical tools, as crazy it might seem, and draw the high. Hang on, let's not use that one. Let's use an arrow, or a path rather. We've got to draw that line, which starts, actually let's do it this way. So let's take the base of the triangle to the top and duplicate that from the breakout point of the triangle, assuming that we get a breakout, which we haven't had yet. And I'm going to switch this to a weekly chart. It's going to look a little bit different, and I'm going to grab that and stick it onto the breakout point of the triangle. Strictly speaking, we should use the center of the triangle as the breakout point, so I will do that just to be more conservative, and let's have a look at where that takes us. That's about 6,500 if we just use the triangle base as the target, which is the normal technical sort of process. That's 6,500. But for now, I think we can just go for the top of this triangle, and that's at about 4,800, where we started off this move. And then down below here, I've got Solana, this is tricky. Let's just do it like this. Let's get rid of this one. And then Solana I like very much as well, because I think this is due for a breakout. It doesn't trade on... Let's just have a look at it, Coinbase. Yeah, so there's Solana, and basically it's a pretty simple picture. A little bit of a breakout, similar to Ethereum. Ethereum's got a very big structure like this as a triangle. We've seen a similar picture on XRP. We had a breakout on XRP. We'll have a look at that chart now. But we broke out, fell back in, back to the channel center line, back to the 200 period moving average, which you can barely see because we haven't got enough space here, and then bouncing off the top of that channel line again. So I think really we've gone long. We went long this morning, and I think this is a great place to be buying Solana if you believe it's bullish. I'm not encouraging you to do so, but I think this is a good play for various reasons. I think at least in the short term, there's a pop available on Solana, and this is a good place to be buying it. Channel top, breakout, retracement back to the channel top, the 20 period moving average on the day chart, sorry, weekly chart. Let's go back to the day chart. I think it's the 200. Yeah, so we're resting on top of the 200, the 50, and the 100 period moving average in this order block on Solana, which is also the top of the breakout range that we broke out of. So target for that really just like very similar to Ethereum, back to the top of the range. And then I guess we could use that distance from the bottom to the top and consider this to be a pretty messy, but let's look at it like a bull flag. We could use that flagpole as the target. And so what I would do, this is just very rough, don't rely on what I'm saying at all. I've got an angle now, and I've got a gradient, and I've got a distance, and I can stick that onto the end here, assuming that we've broken out. And the target really is just back up to where we started off here. So 300 on Solana, and many people think it's 3,000 or 30,000 on Solana. It may well be, I don't know, but I'm just aiming for that short-term pop at the moment on Solana. And folks, I think that's it in terms of the analysis. I'm going to see if there are any more other questions. A lot of questions, so I won't be able to get to them all. I'm going to try my best. Volume indicator, okay, we talked about that. Kogi, gold news, appreciated. Thanks, Kogi. Kogi, is your name Kogilan? I had a friend of mine in South Africa, in Durban. I used to play cricket with him. He's an opening fast bowler, tall chap, called Kogilan Moodley. Kogilan Moodley. And him and I were the opening bowlers for the team. And the reason we were the opening bowlers, both of us, him and myself, was because he was a really good bowler, tall Indian fellow. Like those Indians that just bowled out England pretty damn well yesterday. That sort of tall, athletic bowler. And the other opening bowler was me. And the reason that I was the other opening bowler was because I was the captain, not because I was the best bowler. But I could choose who was the other bowler. So his name was Kogilan. I haven't heard that name for a long time. Good morning, Rohan. And I'm just going to greet as many people as I can. Marco, the target for ETH and Solana, we talked about that. Thomas John, low volume. Yes, low volumes today, very, very low. That's for sure. You can see it by the way the market's moving. Good day, Emily. Japan side. Love that, Arcus. Thanks, Emily Trading. Tanil. And so on. Daniel, our account winner today, missed the lit trade. You can rewind, Daniel. Saeed, any chance DAX hits 22K this year? DAX, 22K? Well, possibly, yeah. I don't know which way this is going for the rest of the year, but 22K, probably quite easily, really. We don't need much of a dip to get back down there. It's just down to this sort of level here in the middle. But, you know, what's going to happen here? What's going to happen at this top? And are we going to see these markets in general? Remember, we've got the Zweig breadth thrust going on here on the German 30, as well as the NASDAQ and the S&P. And what that means is that we could see this moving up another 10 or 20% in the next 12 months, if history is repeated. So I don't know. The answer is I don't know. We could go up, we could go down. I don't know exactly which direction. Whoops, I just let you into my private chat there. into my private group. Hello, private group. Gold is a strong 4-hour candle and threatening to break out on the ascending triangle on its way to 3,500. Can you cover gold? Well, we talked about gold in some detail, but I'll circle back to that. Let's have a quick look. It is breaking out. You're quite right. This is the gold day chart, and it is moving up. And we're about to be stopped out. My short position is at 32.90, top of this candle, 32.90. And if we touch that candle, I will be stopped out at break even on gold. I'm long on silver, remember. This is really important to remember. I'm not in the wrong direction on gold by chance or by error. I'm trying to trade the pullback on gold, but I'd like to be long eventually. Whilst I'm trading the pullback on gold, I'm buying silver to offset the risk and to also profit from a rising metals market. So I'm long on silver, got some good profit on there, as you can see. We've moved up since that entry. I got long there, and we've moved up about 5% since I got long on silver. And I have lost nothing on gold except for the profit that I had on the short trade. And the short trade would have been a bonus trade in any event because it was a stolen trade, a short, against in the direction of a long trend. So it would have been a bonus and not an expected profit. But the silver trade is an expected profit because I'm in the direction of the trend, markets are moving up, and I want to be with that direction. So yeah, we could hit 22K on the DAX, Saeed, but I can't say it's got any more than a 50-50 chance of going one way or the other. Probably it's got a better chance of going up or down. I don't know which way, and I don't know which way the chance or the probability is angled right now. So I can't give you any further help on that. And then gold is strong. Okay, we're talking about gold, the Meister. Thank you, Emily Trading. Don't think I'm a Meister, but I've been doing it a long time. And then copper. All right, we talked about copper. A tall Indian female, Kogi. Oh, there you go, Kogi. So it's a lady's name too, not just a man's name. But is it Kogi or is it Kogi Lan? That's what I want to know. Yeah, good bowlers. And these new Indian bowlers, by the way, if you like cricket, are very, very impressive. And they bowled England out when England should have won in the last test match. Got them out. Took 4 or 5 wickets for 30 runs, I think it was. All right. And I think that's all, folks. I think I've covered as much as I can, unless there are any further questions. Just watching Bitcoin crashing down on the 15. And let's see what's happening here. Let's zoom out, zoom into this, see what's going on. Yeah, just dripping down a bit on Bitcoin. This is the weekly chart. Let's go to the day chart. Crashing back down to that support level. So we're going to have to watch this level very closely. That's Bitcoin. And you may want to consider hedging if we break and close below that 50-period moving average, that tweezer bottom, and the previous breakout level on a daily basis. If we close below there, Bitcoin will probably move down to the next support level into this double bottom, not double bottom, double top, but it's sideways. You know what I mean? Doubled up volume profile over here, and the center of that, which we probably have to fall into, is about 106,500. So be careful of that. If you're oversized, over-positioned, overconfident, over anything, you may want to consider removing some size or hedging. This is not the time to lose your trading account with a small retracement because you're oversized. Because if you are long, you're probably in the right direction, but you could still get wiped out by a relatively small retracement back down to the 100-period moving average or into the 108, 106 level. So be very, very careful of that. I don't want you to be wiped out when you're actually in the correct direction, probably, on crypto, but you got wiped out because of a small retracement because you had too much size on your trade. You might think that sounds unusual or unlikely, but I promise you that sort of thing happens time and time and time again, all day long. I hear stories myself all the time. So be careful of that. And if you have to hedge or take size off, do that. It's the right thing to do. I'll see you in the next live stream, probably tomorrow. And I'll also see you in the live stream at Ola Prime TV, 8:30 a.m. Eastern Time tomorrow. And please make sure that you're subscribed to this channel and that you've pressed the like button right now because there are quite a lot of people watching and not enough people subscribed. And if you do subscribe, you'll be entered automatically into the draw for some awesome giveaways that I'm announcing starting next week. So, in fact, starting this week, I think. I think we're actually announcing them either tomorrow or Thursday. But it's only for subscribers. and only if you like this video. Now, that last part's a joke. Have a great trading day, folks. Catch you tomorrow. Be safe. Be careful of Bitcoin. If you've got too much size on your crypto and it's moving down, looks like it might do, it might test you today. Make sure you take some size off or hedge, protect your position. Be safe. Take care. I'll see you soon.